Market update, Bitcoin, gold, and the currency confidence question. The markets are buzzing, and the big question on everyone's mind is, could Bitcoin climb to 130K before pulling back? Today, we're going to break it down piece by piece. Welcome back to the show. Crypto flashpoints, the latest market moves. In the past hour, the market experienced a $160 million liquidation of crypto longs. This is a vivid reminder of how quickly leveraged positions can unwind in volatile markets. Fast-moving liquidations like this can cause temporary price dips, but they often create buying opportunities for strategic investors. Gold, breaking records. Amid uncertainty, gold is making headlines, hitting nearly $4,000 per ounce, the highest levels ever recorded. Global uncertainty, political tension, and economic instability have pushed investors to seek safe haven assets. Are we witnessing the start of a currency confidence crisis? Some analysts think so. Comparisons are being made to the 1970s, right after the Bretton Woods system collapsed, when gold surged dramatically. Ken Griffin on de-dollarization. The dollar has depreciated by roughly 10% in the first half of this year, the biggest decline in 50 years. People are looking for alternative stores of value. Assets like gold and cryptocurrencies are attracting significant interest as a hedge against U.S. sovereign risk. In many ways, gold has reclaimed the role the dollar once held as the world's safe harbor. This trend signals a fundamental shift in how people perceive money and wealth preservation. Bitcoin, the debasement hedge? Anthony Pompliano weighs in. Bitcoin is increasingly being viewed as a debasement trade. Simply put, investors are using it as a hedge against inflation and currency devaluation. While traditional investments may underperform when measured in Bitcoin, digital assets offer a new yardstick for wealth preservation. It's worth noting that gold has outperformed Bitcoin this year, 50% versus 33%, but history shows that Bitcoin tends to shine in Q4, with average gains of 60% since 2015. So even if gold seems to be leading, the race isn't over yet. Peter Schiff has criticized Bitcoin as digital gold, but for many mainstream investors, comparing Bitcoin to gold is simply a framework they understand. Meanwhile, Goldman Sachs raised its gold forecast to $4,900, signaling continued upward momentum. Silver, too, is making waves, up 68% YTD, thanks to supply constraints and rising demand. Economic landscape and Fed dynamics. Inflation remains a central concern, impacting every sector, from housing to healthcare. Experts are cautioning the Fed to carefully consider future rate cuts. Neutral rate estimates, 3.5 to 3.75% current rate, 4.25% key challenge, balancing inflationary pressures against labor market dynamics. Markets are pricing in potential 25 basis point rate cuts at the end of October and early December. Yet the trajectory of inflation and economic growth will ultimately dictate the Fed's decisions. Bitcoin outlook. Can 130K become reality? Some analysts are targeting 124K as a pivotal zone, with a potential run toward 130K or 140K by October. Short-term retracements to 117K or 118K are possible, but overall momentum is strong. Key factors driving Bitcoin's potential surge. Institutional adoption and inflows, continued interest from retail investors, macro pressures such as dollar debasement and gold's rise. A few weekly closes above 123K could set the stage for a 20-30% rally, signaling the next major phase of the bull market. Adoption and institutional inflows. Despite the hype, crypto adoption is still in early stages. 60% of investors currently have zero exposure to digital assets, Bank of America survey. Last week, crypto funds saw a record $5.95 billion inflow, Exceeding prior highs, Ethereum, Solana, and XRP recorded significant inflows, reflecting growing institutional confidence. The potential market cap for digital assets is staggering: 1.9 T by 2030, possibly climbing to 3.8 T with accelerated adoption. This represents a massive opportunity for investors who enter early. Strategy and risk management. Navigating today's market requires a strategic mindset. Discipline matters, but comfort is less important than risk management. Investors must remain flexible, adjusting positions as the market evolves. Timing, position sizing, and understanding macro trends can differentiate winners from average participants. Those who navigated the bear market successfully are in a strong position today. Current holdings in Bitcoin and Ethereum may offer substantial upside, especially with retracements that could serve as buying opportunities. Technical snapshot charts indicate that the recent pullback from 126K to 124K may be short-lived. Volume and sentiment remain favorable, suggesting the market could resume its upward trajectory soon. This week, we'll continue tracking Bitcoin, Ethereum, and key projects like Solana, Sui, and Avalanche. Opportunities abound, but careful analysis, risk management, and awareness of macroeconomic factors are crucial. Consider joining the Diamond Circle for exclusive insights and a deeper dive into these trends. The interplay between digital assets, gold, and macro forces makes this a pivotal moment for investors, and staying informed is the key to capitalizing on it.